Property Podcast. I'm Simon.
And I'm Simon.
I've been investing in property for over 20 years, and if you're an active landlord or planning your next property investment, this podcast is for you. Simon Glastonbury, who joins us today, is an independent mortgage broker with over 25 years of experience, providing mortgages, bridging, and development finance for home buyers and investors. Now, of course, today we have to talk about the Bank of England base rate, because last week as we record, 2 weeks ago as this goes out, it was reduced. It went down from 4.75% to just 4.5%, a whole 0.25% drop, which I'm assuming, Simon, is absolutely fantastic news for the mortgage market and everyone who's currently looking for a mortgage. Am I right?
Well, that's the burning question, isn't it? Is it good news? Well, as you can imagine, as soon as the announcement was made, we were inundated by all the clients who have current mortgage offers or applications in. The whole team were, as I imagine, every brokerage was throughout the country. When's my rate coming down? What's happening? How good is it? Right, how much can I get 0.25 off? No is a simple answer. The lenders yet again were, shall I say, clever in their in what they were looking to do. They pretty much across the board, they put rates up before. Clearly didn't announce that. That's not good marketing, product marketing. So the rates went up before the base rate was the drop was announced. Great, big fanfare, rates coming down. Media all over it. Right, this is great news for, it was on the BBC, I noticed, great news for the borrower. Well, no, it's not, unless your fixed rates come down, because over the last number of years, very few people have been taking tracker rates. So they're the only ones initially who would be affected by it. So we want to be looking at fixed rates because that's where the majority of people on residential and buy-to-let mortgages are looking. We all look at, as unless there's a specific need. So no, we then, however, it's now a week or 10 days on from the drop. And it's about this time that lenders then get their act together, reprice, look at what's happening. So it's now we look to see where rates are. They're still above where they were in December, in short. So although we've had the 0.25% drop, because they put them up, they haven't put them down enough to then counteract. So any applications we've done in pretty much sort of December time, they're still on a better rate, even though, because we're then getting people, of course, lenders are then coming back to us and all over the media again saying, yeah, we're dropping rates. And it's been all over. All the high street lenders have done it. We're dropping rates. Fantastic. So you can imagine we've been inundated by clients saying, I've seen this. This has come up on my news feed and whatever, the Daily Mail and the BBC and whatever. Look, they're dropping rates. It's got to be good news. Can I have the lower rate? No, you're still on the lower rate than you were. So at the moment, and we're nearly 2 weeks sort of post announcement, it's not good news for the borrower. What I would say is I don't want to be completely doom and gloom at the start of 2025. So let's have a little bit of positivity. I think if you then start looking at, we have sort of some background information from the markets and where the markets are going to go. As of, at the moment, there are lots of rates out there. There are lots of products out there. So, but I think certainly with the market, it is a little bit stagnant. There's not an awful lot of movement.
But just to clarify, do you mean the mortgage market or the property market?
Both, I would say. I'd probably say that they kind of go hand in hand a lot of the time. I'm being generalizing here, but I would say, they're kind of hand in hand, but looking for the mortgage market to help kick the property market on. And I think that helps. I think psychologically, when we start getting mortgage rates in the residential market below the 4% mark, I think there's certainly a feeling within the industry that will start kickstarting the property market. I think just psychologically for everybody always has a 3 in it, even if it's 3.99, 3.95. It's like in the shop, isn't it? It's the old why shopkeepers always put it for 99p and not a pound. The same thing. Doesn't make a huge amount of difference to the monthly mortgage amount, but to us, we feel we're doing a little bit better and we're all the same. But we then start looking forward and you look at swap rates and bank rates and what they're looking at coming up for the year. And it's positive news. It's positive news that we're looking at another cut in May. Pretty much, that's nothing is cast iron, is it? We don't know. We can only go by what the banks are telling us. We're looking at another one in May and one in August. Now, let's just say, let's put our little sort of magic hat on and say it's coming down 0.5%. Fixed rates just simply have to come down from where they are at the moment. You would think common sense would say there is no way that Bank of England base rate can come down by that much. 0.75% within the year, and they can't then get the fixed rates down. Now, there's a lot of indication that's going to happen. Unless anything drastic happens along the way. I mean, who knows? Outside of our control, outside of the country, that. But let's just say we are where we are at the moment. I'd like to think sort of summertime, we're down to base rate's going to be down to sort of 4%, and fingers crossed. And I think that's going to have such a knock on with the fixed rates. That's going to then boost the market. Good people are then going to think, actually, they're quite sensible rates now. They're probably not going to get much lower, even on the investor side. But they're at the point now, things then become more attractive. The buy-to-let portfolio landlords and then looking at it and go, right, okay, there's a yield here to be had. And then you're not looking at the 5.5%, 6% rates. You're then hopefully looking at a 4.5% rate, maybe. Subject to fees, of course, which are our favourite conversation. But then you look at those, so that might be something we can sort of look. I definitely think it's going to be a positive year. The burning question is, I suppose, for everybody is, well, should we wait?
Yeah.
Now, it's going to depend on the property you're looking for, maybe the investment, whether be it residential or investment. It's on that property. Is that a right property for you? Can you make money out of that now? And I think for the shrewd investor, that 0.5% difference in rate doesn't really matter, because if you get the right property, there's a lot more money in that property over the term than a 0.5% difference. I think that's the key there. So I definitely think there are positives. I personally can't see it coming down much lower. I'm not sure if base rate will go into the 3s. Possibly it might touch on it. There's not much in the way of indication that it will. It may come, but I mean, I think around 4% is fair. You look at the inflation reports, what's happening there. I think 4% is fair, and then the fixed rates will even out, and hopefully boost the market.
And you think that there is still scope for actual mortgage rates to maybe not follow the whole 0.5% down, but to follow some of it down, and they haven't built too much of that in already.
That's the burning question. Yes, they're very clever on building pricing in any potential base rate cuts. I think it's a bigger base rate cut, or the expectation now is a bigger base rate cut than was first anticipated. So therefore, I think there is some scope for it to drop down. I think we need to be really clear, and although we're the man on the street, the general public, they're much better informed these days than when I first started out in mortgages many, many years ago. They're a better understanding of how base rate works and how fixed rates are priced, and most people then know that they don't just marry up. If they realise that if base rate drops, it's not going to drop by 0.25 as well, or a 0.5%, or whatever the case may be. But there may be a drop on the horizon, but I do think there's some scope there. It does depend, of course, it depends on how much it drops, as if it drops and when it drops. We're keeping everything crossed, but I really do think it's a positive sign. Everything's pointing that way. Bank of England are coming out constantly with statements or what's happening, how many people are voting, how many people are voting that they should have had a bigger drop. So it's all pointing to that, and I think there's scope there. Now, if there is scope there, then you will see some drop. It's not going to take a lot to get under that magic sort of, what seems to be that magic 4% mark at the moment. Now, there are rates there. They're certainly in the buy-to-let market, which we will always discuss at the end. But in the residential market, which we will all, even the investors among us, they will generally have a residential property there. Now, those rates are still, they're very close together. That's what's quite interesting about the market at the moment. And since interest rates went back up, the differential between a residential rate and a buy-to-let rate is really quite close. Historically, that's always been about 1%, I would say. I'd safely say 1%. So if you had a 4% fixed with a residential remortgage with someone, you would probably be looking at 5% on a buy-to-let. But of course, then the products are a little bit more sophisticated these days, thank goodness. You've also got the issue with they've tried to trick them up a little bit with large fees and different stress testing and whatever. So, but they are quite close, which is, it does help people to look at, but also confuses as well.
Nothing like trying to confuse everyone.
Absolutely, yeah.
So the other sort of worry on the horizon at the moment, or we've got base rate looking positive. We have got a stamp duty change coming up in April, which is obviously a bit of a negative for the property market as a whole. And we are now mid-ish February. There's not much time, sort of 6-7 weeks between now and that change of stamp duty in April. Are you seeing many people getting worried about this yet, or are we still a little bit too early? And do you have many customers that you think are sort of at risk of having to have a failed purchase if they don't get it done in time for that deadline?
It's a great point. At the moment, as a team, there's 8 within our team. We have, I don't know the exact number, poor management there. You can obviously clearly tell, but we have a large number of people who are purchasing at the moment. So they could have started the purchase October, November, December, January, possibly. You're cutting it very fine. I haven't got anybody personally who's started a purchase in January and want to complete in March. But we have got them. We haven't had anybody at the moment, from what I'm hearing on myself, who are particularly concerned. Now, like I say, we're mid-Feb. We start 2 weeks down the line. People are starting to get very nervous. We know. I mean, what's quite odd at the moment, and we can't quite put our finger on it, are conveyancing solicitor companies seem to be really, really slow at the moment. In the majority, there is always going to be certain firms who are very good and get everything out the door really quickly, turn things around. But we only had a call between us all last week. To a man, we were all saying how poor conveyancing firms are at the moment and how slow they are. Sorry, poor is not the word. They've all got their job to do, and that's fine. But it's the service. It's how quickly they're getting things through, how quickly they're answering inquiries, chasing up inquiries. Everybody's moaning about them, saying, "Blimey, this is a concern going forward." And then, so we move on 2 weeks. So let's just get the first week of March. You've got to then be looking at an exchange date. If you're in the first week of March, you've got to be looking, right, are we in a position to exchange next week, week after? Because a lot of the lenders, depending on which lender you go for, some of them will need 5 working days to draw down funds. So you can't leave it too soon. You can't leave it too late. People have to, if you're talking about There's a difference between investment and residential, because if it's investment, it doesn't matter. You haven't got removals to sort out, and everything else, gas, electric, water, all of that can kind of wait. You know what it's like. It's a much easier process. You simply get the keys.
Yeah.
If it's residential, that's not the case. You've got to move. You've got to move the family. You've got to take days off. You've got to all of these things you've got to juggle, and you need to know that in advance. It's kind of I digress slightly, but we've gone to a world of exchanging and completing pretty much within a week now, which is quite good because it speeds up the process. But actually, to manage that on a personal basis, fine again for the investor. I'll pick the keys up tomorrow. I'm not really worried. I know it's mine. I'll worry about that later. It's quite easy. On a residential basis, blimey, I've got the children to move. I've got the wife, girlfriend, whatever. All of these things you're juggling. Can the removals people come? You speak to anybody in removals, every single removals company is really busy on a Friday because you complete Fridays. And they're going, please complete on another day. So all of these things to move, but sort of going back. So you'll sort of I come back to the point where anybody out there who is looking to complete by March, and there are a lot of people, unfortunately, there are going to be a number of those people who are going to miss that deadline, and it's going to cost them a lot of money. Repercussions of that, speak to the solicitors. I would imagine there's nothing in that you can get it back financially, because they have to answer off their inquiries as they see fit. That's what they're legally bound to do. They will try and get you there, but whether they do or not, I know out of the number we have, we will expect a number of those clients to miss that deadline, and it's going to cost them thousands, tens of thousands in stamp duty, because it's a big difference on some of the cases, which is really, really disappointing. So anybody out there sort of looking to do that or looking to get in by then, push. Be that person who, you like anything, at this point you have to be. If a conveyancer, and 9 times out of 10, actually it's more than that, the solicitor doesn't really get involved with the conveyancing. It's going to be a legal clerk. It's going to be an admin clerk. Get onto them. Make sure you're on first name terms. Be nice, but also be a pain, because you don't want to miss that deadline. And of course, or at least if you're in a chain as well, you need to know, this is where estate agents earn their money. They need to know where that you are, where every single person in that chain is, because if there's a danger of you missing out, it's better to know early, so you can kind of prepare yourself and come up with a plan B.
Yep, indeed. Yeah, very, very, very wise, I think, to, as you say, be polite, but be a bit of a pain too.
100%. I always think I'm a great. I hate anybody who then gets shouty, because it's, they think that's the best way to be. I've never worked like that. I don't understand how people work like that. If you do and you get through life by shouting and bullying, think you're bullying your way through, that's down to you. I won't deal with people like that at all. I've got any time for that. But I always just think it works if you get on first name terms, because these conveyancers they're going to be busy, because at some point, the closer we get, we're 6 weeks away. And that last week is kind of irrelevant, because you're not going to be exchanging and completing in a matter of days. The lenders won't have it. Of course, the lenders won't have it, because they won't have time to send the funds, because they're going to be busy. And you've got to get all of this in, and we just presume the end of March. So you've got to get all your ducks in a row as soon as possible and make sure that everything there. But unfortunately, some people are going to miss out.
Yep, very, very sadly. But yes, it is inevitably how it goes. Let's just hope it's not too many, and especially not too many of your customers.
Yeah, there's fingers crossed. Because it's like us, poor old us. But I mean, we do all the work up front. It could have been a very difficult, complex mortgage case to get it to there in the first place, and that's it. Our business, we lose the business. So all of that work, all of those hours we put into the case. It may be an easy case, not so much these days. That's why people generally come to a broker, so we can help them out. And then that's it. It's all gone up in smoke because something out of our control, be it another broker, be it another client, be it someone in the chain or the conveyancer, out of our control, and then we lose the business. It's really, we don't want to lose any of it at that point, because it should all complete. And the most important thing, is the client, because they're going, if they do move ahead, it's going to cost them a lot of money in stamp duty, and that's not. None of us like to pay stamp duty. It's such a huge amount of money with properties. It's great for us, isn't it, that house prices have gone up? We love that because we all think we're doing so well for actually doing not a lot. But now, compared to when you and I bought properties, first property many years, the stamp duty is eye-watering. It really is.
It is. It definitely is. Right. Let's see if we can cheer ourselves up with a change of topic. And let's do our interest rate roundup. So these are currently actually really available, sort of goodish mortgage rates. And we'll cover a few different scenarios. And obviously, most people listening to this are investors. So we will get to those. But we always start off with a sort of home buyer residential type mortgage rate. So where are we looking for that, Simon?
Well, as we said, let's start with the residential side, because most of us out there, we've got a res in a background, so we'll know where we are. In short, we had a brief chat in a very festive Christmas chat in December, just before Christmas. And in short, the residential rates, even though base rate has gone down, are still very slightly above those.
No. I'm sorry. This section is supposed to be the good news section.
I apologize. To everybody out there. I really don't have any control over this. They're very slightly above. Now, like I said, we are looking that these are going to come down when we don't know. But these are rates as of this morning. So you're looking for a 75% loan to value, 2-year rate at 4.41. So, and 5-year rate 4.26. What's quite interesting at the moment, more and more trackers are being looked at because if you're looking at going on a tracker now, even most trackers are 2-year. Mm-hmm. So there's a 4.29 tracker. Now, if that then comes down, if comes down by 0.5%, you're then looking at, in the summer, you can then be looking at 3.75. Now, that's then a little bit nicer. That could be. You've got to be thinking, well, is the fixed rate going to be coming down from 4.41 to 3.75 in that time? Definitely something to weigh up. If you like, I know a lot of people just like to know their residential property is fixed and they forget about it. Understand that totally. But it's certainly something to consider now. They're not as horrific as they were previously. That's at 75%. There are some the good news is, if someone's looking, if you've got family, you've got friends, if you've got children looking at sort of first time buyers, there are 95% rates out there at the moment, which are quite nice. A 2-year at just over 5% at 5.14 and a 5-year at 4.89. Again, with a 5% deposit to get on the market, I don't think that's bad money at all. I think that's quite positive. So hopefully that will give a little bit of boost to the first time buyer market. Maybe that's why they're doing it, getting those rates quite competitive to try.
Presumably the fees aren't too bad on these either, because they're residential.
Absolutely.
Homeowner ones.
Yeah, you're looking at 909, 1499 as a fee. You can always add them to the mortgage. So it's not something you have to come up with. Most of the high street lenders will now offer a free standard mortgage valuation with a purchase. That's really, really popular now. So you don't then have to. So for a first time buyer, the outlay to get going is, obviously you've got to look at stamp duty and you've got to look at legals. But, you look around, you get a quote. It's unless you're buying a really tricky, quirky property, and that happens in the investor market, conveyances should be fairly simple. That's it. Limited company buy-to-let's a little bit different. They have to do a little bit more. You've got to get a special, a particular solicitor. But you look at the standard stuff, it's certainly helping to keep costs down. So I think that's a positive. I mean, they're going in the right direction, and let's hope this base rate is coming down a little bit more. So we will see those dropping, and it doesn't have to come down that much before we hit that, as we were saying before, that sort of magic 4% mark. Right. So let's get on to the investor side.
Yes, indeed.
The meat and potatoes of the world.
Yeah, so we normally start with personally owned property, but buy-to-let investor.
Absolutely. Let's look at a buy-to-let in a personal name. you're looking, right, lowest at the moment, we're looking at 75% LTV. Now, there's a real turn where people are looking either 2-year or 5-year at the moment. A lot of people have gone back to the 2-year to think, right, rates are coming down. I don't want to lock myself in. Problem, as we said before, and we've had many a conversation about, lenders will lend you more. The loan amount is generally higher with a buy-to-let if you go for a 5-year. But let's take that out of the equation at the moment, because people have to speak to the broker and certainly speak to me, and we can work that out for you. But let's just presume you want to go for a 2-year. Lowest rate at the moment, 4.15. Nice.
Mm-hmm.
With a £3,500 fee fixed. Okay.
Yeah. Okay.
So depending on the loan amount, I've then put best, but it does depend on the loan amount. 4.42 with a 1,750 fee. So not bad at all. You're very, very similar to the residential market. This is where I was talking before about the rates. The differential is so small now.
Yeah, they are, aren't they? They're very, very close.
Absolutely. Now, if you're buying something at £80,000 and you're getting a £50,000 loan, paying $3,500 in fee is not going to be very attractive. So you've got to look at that on each occasion. But if you've got, the average sort of size, you're buying something £200,000, £300,000, then it becomes pretty good. 5-year rates only slightly higher. The lowest is 3.94, but comes with a 3% fee. But again, 3%, not horrific, not great, not horrific.
Yeah.
The best out there, I could come up with a £250,000 loan, 4.37 with a 1,750 fee. They're there. I think that market is really competitive, but then we look at that and say, we look at it as a business. Most buy-to-lets are then being purchased in a limited company name.
Yep.
So lenders may be looking, knowing they're losing that business, maybe getting a little bit more competitive. We can only try and see what they're thinking at the time. So let's go on to the limited company buy-to-let, which is certainly where most people are looking these days. Now, 2-year, you're going to love this one, Simon. You really will.
When you say that, I worry.
We have, drum roll please, the lowest 2-year rate on the market, 2.39%.
What? Have they put the fees up again? Is that a 10% fee or something?
No, I was working the fee out and I had to double check this. I thought, it's not quite 10%. It's 9.99%. We laugh nervously.
That's just a ridiculous fee.
Yeah, 9.99. They haven't even put it as 10%. It is 9.99%. One lender at 9.99%, but you're getting 2.39. How, why, where that would fit in, I'm not quite sure. It's the first time I've seen it. I would have to crunch some numbers to see if that makes any sense at any point, anywhere.
And did you say this was a 2-year fix?
2-year.
So you're paying a 10% fee and you only get it for 2 years.
Yes,
and then you've got to think about fees again.
Yes. Another 10% if you wanted to. Eye-watering.
Yeah.
I would really love to know. And I'll try and find it out for you, how much of this business they're doing, because it would be really interesting to see what sort of take up it is, if it's the odd one here or there, or if people are really jumping on board. I can't believe it. How I would come across and recommend that as a broker, I've got no idea. I just can't see it. There would be so many sort of caveats to that. I really would. So I know. And then, but the best on the market, looking at best, going back into the real world, 5.54, £1,500 fee. So I think that's a little bit on the steep side, personally. If you then look on the 5-year, which is a bit more sensible, and pretty much most of them are going into, you're looking at the best rate, 4.89 with a 3% fee. The lowest, 4.15 with a 7% fee. So again, I think the 4.89, again, depends on the loan amount, Depends what you're looking to do, but the 5-year rates are a little bit. I think sort of 4.89. That's kind of where you would expect to be for a buy to let. I think that's fairly good money from where it was sort of previously last year. We're looking at it. Sort of very similar. It was a little bit March last year. It was actually 4.14, and we're now at 4.89. So it's quite a lot higher than where we were last year, which is a bit disappointing.
Yeah.
HMO rates, very similar. They also have a 2.99. The 7% fee. 10% fee didn't come in.
Bargain.
Only a 7% fee. Only. Up in the ocean. But again, best rate, we're looking at 4.59 with a 3% fee. So they're out there. I think if you take away those ridiculous, I didn't think they could get any more ridiculous than what we've been talking about over the last sort of year, 18 months, but they have. They've cracked it. I mean, it makes me wonder, we should do a little sort of stop clock. Can they get over 10%? I never thought they'd get to 10%. I really didn't. Never seen that in all my years.
But basically, you're just paying the interest as a fee. I wonder how long it'll take before they get to a 0% interest rate, and it's just all fee.
Yeah, added to the mortgage. Absolutely.
Exactly, yeah.
Yeah, we can add
you can
that
write it off against tax and stuff as well. So.
Yeah, you can add that. Interesting, maybe there is something. If you give that to your accountant and say, look, I can have this. What do you think? I don't know. Yeah.
Because it's all front loaded, you get to write it off straight away, you see, rather than having to spread it over 2 years or whatever. So
absolutely.
I mean, it's the same end result. It's just timing wise.
Yeah, but interesting though, isn't it? I mean, that could well be the reason. Is that their thinking behind it? Again, I've only just seen it, so I will delve into that in a bit more detail, so we can find out. But you never know. I mean, that might be their thinking. And if it is, and if it works for you,
maybe,
yeah, maybe, because you can then write that off, still pay. You can make overpayments if you wanted to make sure that fee is then paid back over the 2 years. Added onto your onto your payment. If it's going to cost X amount, it might work. Who knows? So there's something clever out there in listener land who will tell us exactly why, but I'll go over to the lender and I will report back to you.
Excellent. I will look forward to the answer to that in the future.
Absolutely. I think there's some good news. There's a bit of good news in there. Residential, not so much, except for the higher loan to values. They're a little bit more aggressive. Lower, not so much. So, but yeah, I think it's kind of watch this space and hopefully we'll get something better in the near future. But I certainly think, again, I said previously in December, I think there are a lot of positives in 2025. I think it will. I think where people are trying to get over this stamp duty issue, first of all, get that out because there will be a rush, certainly from Graham Vaetz's side. See if rates then come down, and then I'm sure spring and summer is going to be a good times for all of us.
Excellent. Good, positive finish. That's what we like to see.
Absolutely.
Cool. So for everyone listening, if you would like to take advantage of Simon's expertise, then his contact details will be in the show notes, and you can very much get in touch with him to discuss anything about mortgages, bridging, and the whole finance world for property. And if you have views on whether you think we'll see mortgage fees go over that 10% level or anything else, you can email in on show@thebusinessofproperty.com. And other than that, we'll speak to you again next time.